Hi, this is Monday the 9th. It's about 8 a.m. in the UK. Market makers back out their desk. So I take the opportunity to record a weekly recap with kind of live data, pre-market data. There was no major move over the weekend, and we probably don't expect much happening before FOMC on Wednesday. So without further ado, I think I can keep it relatively short because there's actually not that much to say. This is the January regular trade, and it is doing fine. We have, if you have watched the SPX Outlook video that I posted on Saturday, there is, of course, a chance of the market, breaking higher. I mean, we are just inches away from all-time highs that were hit earlier this month. At the same time, are we going to see a double top? Are we going to see some long overdue profit taking? If we do, there are a number of support levels, starting around 31.25, just below 3100, and then probably good cover all the way to 3000 or to maybe 3010. So this trade is safe. If we look at the maximum loss on the upside, it would be about minus $400. We're losing a bit here, and if we look at the price of a reverse Harvey, if we were to just cancel the upside risk, we have about $5 here, even more than $5. So this could be easily eliminated if you have any worry about a sudden breakout. If it does, of course, volatility would drop. Maybe we would get less than that, but we would have no risk, and we'd still probably sell this PCS for about $4. At this point in time, I would reckon that in fairly low IV, we also have a fairly stable Delta Vega relationship. So if the market hovers for a while, of course, there's so little theta, we can't expect much. But at the same time, we're not in a vol crush situation. This is a market that even if it bumps and wants to go higher, there should not be much happening to this trade. Of course, this is the end of the sweet spot, so it could also be an incentive to either add theta here, just cancel, as I said earlier, cancel the upside risk. I have on this trade made an adjustment last week, and that was just a short put condor just to flatten delta, but I think it was about -8 to -4. So it was not a very essential adjustment, just to reduce the upside risk, keep a Delta Vega in good shape. These are not exactly important yardsticks, but if the market would really shoot up and vol really come off to maybe 1150 or lower, I would say that this trade is safe enough. I may be extra cautious, but I don't want to take any chance with, similarly to what happened in 2017. The B2B trade is not faring as well. It's also pretty safe overall, but we don't have the same Delta Vega ratio, and this is not something I look at for the B2B trade. This trade has to be simple. So basically now all we can do is carry on with a slow mutation towards RTT. This one has just 290 upside risk, so it's really not a complicated trade. I would not rush to eliminate the tiny loss that is left, but there again we could carry on just reducing exposure, and we've got plenty of premium still there, so we could definitely have another short put condor. But again, because there are still 39 DT left in this trade, probably 21 to 28 if we look at the planned exit by 14 DT. I would not go delta positive, so that's why if I do a short condor this week and probably after FOMC, again, there's not much risk. And even if I look at the projection, let's say in 2 weeks' time, we do have a good cover. So even in 2 weeks' time, if we look at the T+0, we should be doing okay over a large range of 2 SD over 2 weeks. So even if the later part of the month would unlikely surprise us, this trade is safe enough. So let's just wait. Maybe if we have a strong rally after FOMC, I will do something. Otherwise, I will leave it there, and that's fine. Now let's move on to February. February, if you remember, I entered on a vol pop opportunity when the market dropped a little bit to 3070. That was on the 3rd, and then because the market shot up, I had to scale into full size right after that. But we had good prices. So if we look at this trade February, we're still making a bit of money. So this, and we've got a good cover. And there again, now that the trade is in full size, we are probably, again, if there's no major shock, I mean, the next 2 weeks should be okay. That should be a fairly easy going trade, at least during this take-off period. The upside risk here is very minimal, about $600, $700. And the B2B trade, which was, of course, closer to the rules, it is now with a similar upside risk. I just chose on the B2B to gain a little bit on price by placing the combos just a tad lower. But overall, it is a very similar trade, and I would not take the difference too much into account. It is clear that in low IV, I would tend, I'm not saying that we would enter more on an RTT style right away, but I would probably place my combos a little further down, and in this instance it was just 25 points. So not much to say and not much to do in the next 2 weeks. Now a quick look at the Russell. I did not enter a new trade on Friday, so let's just look at the previous trade fared, and as you can see, the market was just too bullish, too nervous. I don't think I overtraded this one. I mean, it's just the entry, and then I just scaled out just to reduce exposure. Of course, reducing a bit of theta, but it was really on Wednesday and Thursday, so it just keep it as little risky as possible. And as you can see, I had a very flat delta. There was no real point carrying it over the weekend, but I closed the trade for about I'm not sure I had good fills, but I mean 220, so it was about okay. And as you can see, it is a very safe trade with a good success rate of over 80%. So this is a good trade. It is not very complicated, but of course I understand that there may be simpler weekly trades. It is just that it is very simple for people who are already quite familiar, accustomed to the Rhino trading style. Okay, that's it for now. I'll be available later on Slack. I may not enter the new trade for baby because I've got some commitments tonight in this particular time zone, so maybe on my way back I will enter, but it's also okay just to skip a week now and then. Right, I hope your trades are also fine. I know some of you trade their own variants, and I do encourage that because, I mean, a trade has to become your own, and according to your own risk profile, to your own expectations, or even your bias or conviction on the market outlook. For those who subscribe to my alert service, I have no problem whatsoever also helping you out on trades that are completely unrelated to the Rhino. Okay, thanks for watching, and bye for now.